If you're an investor thinking of buying or selling residential multifamilies in Miami-Dade, this is an absolute cannot miss video right here. I'm the only one doing these videos. Go try to find another multifamily property update for Miami-Dade on YouTube. They don't exist except for right here on this channel. Jake Fletcher here with the Fletcher Group at eXp Realty, your Miami real estate agent. And if you appreciate all this up-to-date market info coming straight from the MLS, the backbone of the real estate industry, do me a quick little favor, cost you $0.00. Smash the like button, hit subscribe, and ring the notification bell so you don't miss videos like this in the future, where I bring you important insights such as a megalithic price cut happening in the last month for multifamily properties here in Miami-Dade. We're gonna jump into all of it. This is everything from duplexes, triplexes, and fourplexes through the month of February 2024. So let's not delay any further. Let's jump into the data right here. We're gonna start off with inventory, okay? Now, number of active listings, aka supply, and then number of new listings are what we're seeing here in the green and blue lines respectively. So number of active listings came in at 488. That's up 5 units from January's 483, a 1.0% increase, and year over year we're up 26 units or 5.6% from 462. So you can see in this green line how, pretty much over the last year we've had a good little bump up in inventory. Where we're really starting to see, in the last 6 months, the more pronounced increase of inventory. And, hopefully that continues into the new year here, 2024, and we have more options for people to choose from, because I know multifamilies are a very popular asset category, and the more options that you have as an investor, the more good opportunities that you have, and also that helps put downward price pressure on the acquisition price, which honestly, in my opinion, has gotten pretty wild and crazy, which we're going to get to in a second here. But first, let's talk about new listings, which came in at 133. That's down 8 new listings from January's 141. That's a 5.7% decrease. And year over year, we're actually up from 104 new listings last February, which is a 27.9% increase. So from this point over here to right here, 27.9% increase in the rate of new inventory coming on the market. So that's helping contribute to the overall active supply increasing as well, and it's good. We want to see more inventory because that helps us have a healthy market at this point in time specifically. Now, the next graph I want to show you all here is days on market and then close price to original price ratio. Now, days on market for multifamily properties in Miami-Dade came in at 69 days on market, which is up 12 days or 21.1% quicker than the 57 days on market that we had in January. And I know this graph looks crazy here, but if you can see that green line, you can see how over the last month, days on market increased a little bit, actually 21.1%, right? And that's slowing down in terms of the time that it takes for a property to go on the market to actually get sold, okay? Which you can see this green line, if you can kind of focus on it, you can see it's trending down over time, right? So it wouldn't necessarily be a bad thing to see this go more towards the direction of a normal market. Right now it's, 69 days is it's a seller's market. Now, last year, things were a little bit slower, as you might be able to imagine, at 84 days on market. That's back here. Now, the market is moving quicker now compared to that 84 days by about 17.9%, okay? So, 21% slower than last month, but 17.9% slower than last year. Quicker than last year, okay? So next up is close price to original price ratio. All that is a percentage expressing the difference between what a property is listed at versus what it ultimately ends up selling at. So if it's listed for $1 million and it sells for $900,000, that's a 90% close price to original price ratio. So the close price for original price ratio for multifamily properties came in at 93.2%. That's down 2.6% from 95.8% in January, okay? So getting a little bit further away from what sellers were asking for to what they ended up actually getting. Year over year was 93.6%, so not a huge difference there between 93.6 and 93.2 right here on the year over year time scale, but nonetheless, interesting to see, that we have big, huge fluctuations in that, close price to original price ratio. And a lot of that could be due to just the fact that, the sheer amount of sales, we're not dealing with a huge population. So when you don't have a huge population, it's much easier for there to be large swings like that. And generally we would see that as not being as statistically significant of a data point, although it is still something to pay attention to. It is still a data point to look out for. Next up, let's look at median sale price. So here's where things get really interesting, okay? You can see that median sale price and also number of sales both took pretty dramatic drops over the last month. Specifically, let's look at median sale price first. That's the green line there. And what we see is that median sale price came in at $650,000, okay? That's significant because in January, the median sale price for multifamilies was $698,000. So that's a $48,000 drop in just 1 month. Also known as a 6.9% reduction, okay, in 1 month, month over month, almost 7% reduction in median sale price, okay? So that is definitely significant and something to keep in mind if you're shopping for residential multifamilies in this market. Now, year over year, we saw a $40,000 increase from $610,000 last February. So sort of splitting the difference there, that's a 6.6% increase over the year, from this point to last February. So, seeing a 6.9% reduction over the last month, definitely helps to sort of, swallow the pill of having a 6.6% increase over the last year. Okay. So from 610 to now we're sitting at 650 median sale price. Okay. But if we continue to see more inventory coming on like we're starting to see, we continue to see high interest rates, especially investor interest rates are obviously a lot higher than owner-occupier rates, then we could continue to see this median sale price line coming down, okay? And right now we're at 2 months in a row. So if it happens again, guess what? Then we're going to be seeing a trend of downward prices for multifamily properties in Miami-Dade. Smash the like button if that excites you, because it excites me. If I had a like button in front of me right now, I'd be smashing the hell out of it. Now, number of sales, that's our blue line, came in at 42, okay? 42 sales last month in February. That's down 11 from 53 in January, or 20.8% less. Year over year, we had 59 last February, so that's a 17 unit reduction, or 28.8% less sales year over year. All right. Now, next up, we're going to look at months of inventory and expired listings. Months of inventory, all that is if no new listings came on the market, how long would it take to sell the existing supply? Now, months of inventory came in at 12 months of inventory, up from 9 in January. So that's a 3-month increase, moving from a normal market into basically a buyer's market for residential multifamily properties here in Miami-Dade. And year over year was 8 months of inventory, more than that point as well. So, going from 8 months of inventory, down here up to 12, that's a big increase, of course, of 4 months, and then 9 from last month into 12 now. Overall, we see that trend over the last year has been more and more and more months of inventory. Of course, that is correlated with the increase of inventory. It's going to take longer to sell the inventory if you have more inventory, especially as we saw, in this last graph, we saw the number of sales over the last year has been going down. So that's, something to keep in mind for sure. Now, expired listings, all that is units that did not sell, okay? The listing agreement between the listing agent and the seller expired and it's no longer on the market. So expired listings came in at 106 for February, which is up 4 from 102 in January. And year over year, we have a 19.1% reduction from expireds from 131 last February, which is interesting because normally when you have more inventory, you tend to have more expired listings corresponding with that. However, we've seen a situation with more inventory and then less, 19.1% less expired listings than this point last year, which tells me that there's a very strong demand for multifamily properties in the Miami-Dade market. So, something to keep in mind. If you're a buyer in this market, there's still plenty of competition happening out there. However, we're moving into more of a buyer's market, so we could see prices continue to flex down. If we get that third month trend line of median sale prices reducing, you will be the first to know about it if you subscribe to this channel, okay? So I think that button is like right over here somewhere, and the like button is like over here, or it might be flip-flop. You can tell by looking at your screen where it is, okay? Just smash them all. All the buttons that are there, just hit them, and then you'll be set up for success. Jake Fletcher here with the Fletcher Group at eXp Realty, your Miami real estate agent, and appreciate you guys watching the video. Drop me a comment down below. Let me know what you thought. Let me know if there's any specific videos that you would like me to do for you, or if you have a specific real estate need, reach out to me directly. All my contact info is in the description down below, and I'd love to hear from you, and I'll see you on the next video. Peace.